And we want to talk more about Citigroup, and this time I'm joined by Bill Fitzpatrick. He's a financial industry analyst for Optique Capital Management, which helps manage funds that also hold Citi shares. And Bill, good to have you back on our program.
Good morning. Thank you for having me.
Okay, so we know about the pressures that Pandit is facing right now, given what we've seen at Bank of America. But I want to distinguish between the two because B of A is really a whole different beast than Citi when it comes to paying back their TARP, right?
Yeah, I would say so. Now, I would have told you B of A was unlikely to repay the TARP funds in 2009 as well. But really, you hit the nail on the head. Citigroup is an entirely different beast altogether. That balance sheet has just enormous risk still embedded into it. You've also got that $300 billion guarantee on their most toxic assets. That's something I would suggest that they not unwind. So it's hard to see a clean separation. I think this marriage between the U.S. government and Citigroup goes on well into 2010.
Right, and I don't want to underplay this government guarantee you just described, the $300 billion. I mean, what could be the impact if they tried to unwind that massive amount of toxic assets at a market like this?
Well, then Citigroup would be vulnerable again to some major write-downs, and all of a sudden you'd have capital adequacy come back into play. And that's something that the regulators have made clear is not going to be in play. So they're going to do everything they can to avoid that, which is why I think it's highly unlikely that the government would allow Citigroup to really unwind the TARP funds and do it through mostly internal funds, because they'd only be able to raise most likely $20 billion in fresh equity. Then they'd have to come up with another 25 or 30 billion of internal funds in order to pay the government those 7.5 billion shares that they own.
Bill, I mean, how well, just curious, how well would a public offering, how well received would it be in the public if they were to issue securities?
That's hard to say. It appears as though there is enough investor demand as though Citigroup could generate up to $20 billion. Now, the stock trades at about $3.75, $4. It's possible they'd have to do that maybe at a lower price, but from what I can tell right now, a $20 billion offering is possible, which goes a long way towards showing you how strong the capital markets have come back. Because there was always a risk that private demand wouldn't be there, but that has abated over the last several months.
And Bill, overall, as essentially a shareholder, you think, though, that Pandit should, in fact, go ahead and do this and repay the TARP, that the risks outweigh the rewards? Or the rewards outweigh the risks, I should say?
Well, there's two sides to that argument, no question about it. I tend to think they should not do that. Like I said, I think they need those guarantees on their most toxic assets. But I understand the flip side, because Citigroup technically is well capitalized. And even if they paid down the TARP funds, you're looking at Tier 1 capital over 8%, which is well above that 6% threshold to be well capitalized.
Okay. All right, Bill, good to talk with you, and have a great weekend. By the way, Bill Fitzpatrick of Optique Capital.